The market south of the border getting two boosts today. A U.S. trade court ruling that would, on the surface, block many of U.S. President Donald Trump's tariffs. We also got a pretty strong sales forecast from Nvidia, the chip giant. We're joined by JJ Kinahan, CEO of IG North America. JJ, great to see you. Start off, if you would, with this trade thing. I know it's a moving target. Apparently, senior White House officials are downplaying the implications. They say we've other options for tariffs, but it looks like the market reasonably pleased that the tariffs may be delayed or maybe struck down.
Yeah, I think, anytime things don't cost people more, the market tends to be happy. What the White House is saying, they can still implement tariffs on things like steel, lumber, semiconductors. So that's within the White House's purview. So you may still see some tariffs there, which I think that the Wall Street is kind of viewing as, okay, maybe a more reasonable compromise. The only thing that I think will in the future may make people a little bit nervous about this is if we do go back through appeals courts, et cetera, to this, it's delaying some of the deals that perhaps were in place, or perhaps the White House had announced that they had done in structure but hadn't had anything signed. So, the one thing that we've all learned in this administration is that there's never a dull moment. And so with that, we continue to see a tariff-driven trade, if you will. I actually really loved how you put Nvidia as an economic indicator at this point, as you were just doing the news, because obviously, they had great numbers, and with what many viewed as being a blocker with what may go on in China there.
Right. Sorry, what was that last thing about China and Nvidia?
That China, people are still so bullish on the stock, even though as news came out, China was viewed as a bit of a blocker. The court decision came out after Nvidia news last evening. So it really is incredible. It's helped to give Nvidia even more momentum today on a lot of that, even though, again, the chips come under the White House purview here. So that area still remains a little bit gray, but the demand just continues in a way that's absolutely unbelievable.
Nvidia, clients, accounts that you deal with, do they all want to own Nvidia, even though they may be wary of the valuation?
Well, if I look at the top 5 stocks that our clients trade every day, you are going to see, without a doubt, if you take out ETFs, because SPDR as an ETF is going to be one that's always popular with clients, but you're going to see Tesla, you're going to see Apple, and you're going to see Nvidia. It's just a matter of which of those 3 is going to be the #1 traded stock on the day. Every single day, those are the stocks that our clients are interested in. There's always a lot of news out of those stocks. So right now, as you said, Nvidia is kind of the one that everybody's following. It's the one that's had all incredible momentum over the last year, and it just finds a way to keep going higher.
Would you be a buyer of Nvidia yourself with new money?
Well, I think you have to be very careful of, as you said, sometimes the earnings euphoria, you may have to take a little bit of a break after that one. What's really interesting to me is how the options market priced Nvidia going into the earnings right now. They priced it almost perfectly. They priced in just over a 5% move on Nvidia earnings. As we're speaking right now, it's just over 5% up on the day. So this was an expected move for the stock. Unfortunately, options don't tell you if we're going up or down on the day, but this was within the range that was expected as a 1 standard deviation move. As I said, I think you have to be careful, at least in the short term, when you buy into these stocks after the earnings move. You may want to wait and see if there's a bit of a settled from euphoria, and then think about it.
Clients have been buying Goldman Sachs over the past week or so?
Yeah, they have been buying Goldman Sachs over the past week or so. I think, it's a stock that benefits from higher rates, even though rates are a little bit lower today. They seem to have really gotten their house in order. It was a great article over the weekend about how David Solomon has kind of really gotten the troops in line, so to speak. The M&A activity continues to pick up here in the U.S. overall under this administration, being one that has had less blockers for M&A activity. And that with the bond market having some good moves, trading being pretty good overall on the equity side, and the fact that they can take advantage of M&A, that's playing to all the things that Goldman Sachs does really well. And because of that, our clients have been buying it, and it's had a nice move.
People also buying V in the U.S. as well. Visa, that's a standard blue chip stock, but of course they're seen as that toll keeper on the global economy.
Yeah, they're viewed as a toll keeper. And again, another one that benefits, I think sometimes people maybe have a tendency to forget how much they benefit from higher rates. Because let's face it, these credit card companies charge a high rate to begin with. And so if they can continue to raise rates, that's just money straight to the bottom line for them with no extra labor involved. So high rates to them are really just pure money. So again, this is one where I find really interesting, and our clients looking at that saying two things overall. Again, what I like about it is it perhaps shows that the consumer is still going to be very, very active. We saw that a bit with Kohl's earnings this morning also. For the first time in over 12 quarters, they actually beat expectations. So there is some faith that the customer, the end consumer, even with so much uncertainty on different things right now, is still continuing to spend.
Yeah, it's interesting. Kohl's sales better than expected. We are looking out for that Michigan consumer sentiment reading. And of course, there's been endless worrying and warnings about a consumer in America that's stressed. But the Conference Board consumer confidence came in higher than expected.
Yeah, and again, that to me backs up what we just got done talking about. Mm-hmm. The fact is, as much as people may be wringing their hands, the fact of the matter is people are still spending. We're going to get another view of this with Costco earnings coming up here. And so that's one that I'm really going to keep my eye on. Right now, Costco, the options market is pricing in about a 3% move on Costco earnings overall. So that's become a bellwether stock in terms of how clients are spending. And we'll see what they say in terms of same store sales. And of course, new members for Costco is at the end of the day where they really make their money, is continuing to get new members in the door and those annuity type fees.
Thanks very much, JJ. Great hearing from you.
Good to see you. Thanks.
JJ Kinahan, CEO of IG North America. Up next, we did